Good morning, everyone. And we're going to go over a quick broad market outlook, a couple of top ideas. If there's any names you guys want to go over, like as always, just drop them in this little chat and Heaven will call them out. So getting right into it, really the only sector that's setting up right now is the consumer staples. Think of names like Philip Morris, Coca-Cola, Altria, was one of the names that Shake was calling last week, Walmart, names like that, Costco. Those consumer staple names have been the names that have been setting up the best lately, compared to the other ones where most of the individual names we're looking at have kind of just been aging over, where most of the names in the consumer staple sector have either been basing out near highs or breaking out to new highs. They're just a sector where want to kind of keep some more eyes on in the short term, considering that's really the only sector right now that's looking any bit appealing. Broadly, we get into like the S&P, mid caps, small caps, everything is basically kind of aging over to lows, with obviously the big news or the big headline news right now is this Ukraine saga. For me, again, I'm not too concerned about it, just because our lives are not going to change with whatever happens over there. For the markets, it's more of the uncertainty of, are they going to go to war? Are they not going to go to war? And until that happens, you just have that uncertainty. Once you know nothing's going to happen, the market goes back to its normal, or something is going to happen, and we know that uncertainty is gone, and that fear kind of subsides. But I don't think that it's going to have this dramatic effect on the market, because Apple's not going to sell less iPhones because of Ukraine, and we're not going to shop less on Amazon because of that. It's just, that's the headline right now that's giving us the reason as to why the market is coming down. But for that, if that's what the most participants are seeing or feeling, we don't have to really stand in the way and join in the downside, because all these charts broadly are the same. You see the same H pattern where there's usually one or two main outcomes. Either you blow down through this H pattern and you just head lower, or you get that little kind of shakeout move. So I'm trying to make this. You get this H pattern into support and you get that breakdown lower, or the other outcome is typically you get like that little shakeout and then you get that hard reversal off of it, and you're back in this range. And when we're back up here, everything seems amazing, and when it's down here, it seems as if the world is ending, or a new war is about to begin. So those are typically the two major outcomes. Of course, there can be dozens of other ones, but those are typically are kind of one of the two. Either it's going to really smoke through support and head lower, or it shakes people out enough and reverses back very quickly. But pretty much all these charts all these sectors are pretty much the same, whether they're farther on in the H pattern or starting to just form the H pattern. Like materials have not really broken down just yet, but they're kind of playing catch up, where you have like REITs that have already kind of H over closer to support. Consumer discretionary is kind of in the middle of that H pattern. Healthcare is closer to those lows. So we're just seeing this pattern, and these are not patterns that we want to be buying, or just kind of stepping in front of the train here. So again, this morning I scanned the big picture. I scanned the Dow 30, the Nasdaq 100, SP 500, as well as the 400 or 500 names I keep an eye on in the small cap space. And really, the only two setups that I can really find that'd be worth anything would be the support buyback in MS. Again, we were looking at this blue sky breakout up through 106, and now we're finding that we kind of sneak in on a few dollars risk down here to get some good stock if this is going to continue to flag out here, versus having to be perfect in buying 106. And then this ARE rename, this is really more of just kind of just a low risk reward, high probability of failing, kind of like a shot. It retested that low, it held, and earnings are out of the way. And this is one that you can, or if I was going to buy it, I could buy up through like this 187 versus $5 risk, but really kind of a shot. And the goal would be kind of to look to take profits into any balance into the 200-day that will more likely start to act as resistance now. So really not much out there that I was able to find. But again, if you guys have any other charts that you guys are seeing, we definitely go over those now.
Here, I got some charts. My main focus is on these three names, but I'm not looking to take trades on them anytime soon until the market is at some inflection points like 420 or 400. But I start off with SCCO. I like it up through 69.5 in time, coming off of a nice inside week.
I like it. So I mean, so this is like we're talking about, like this big base forming, and this is exactly like the things that we want to see in these names, where more some of the beaten up names right now, things like Netflix and the PayPal's, it's like they're still kind of in this area, and we need this to base out before it's going to have that next leg. So Christian, definitely with you on that. Definitely looks good. And like you said, probably just going to need some time, but up to that area, definitely this is a spot you'd want to be keeping an eye on for sure.
The next name is this MLI up through 59. I would like to see some more basing, but it's definitely a nice level.
Only just all-time pretty much, yeah. Okay, definitely looks good. I mean, through 59 again, you definitely want to look to take some profits into this little retest area, but definitely looks good. Probably can give this verse like 56. So definitely looks good.
The next name I have is this CINC, recent IPO. I would like to see it tie in below 25.5.
This looks actually really good.
The problem with this one, it's low. That's the problem with the volume. So it would be hard for me to go full size. I might grab a feeler, but I don't know. I don't trust it too much.
Oh
yeah, these are tough because it's cheap and it's low volume, so it's very hard, because you're risking 10% no matter what you're doing here if you want a proper stop, which is fine. Like you said, you have to go really light and see what happens. This is especially for like these newer IPOs. That's something that you can kind of just get a small feeler for and see what happens. But yeah, I would keep expectations low.
Yep, I'm all with you on that one. And I have one more name I'm keeping my eye on. It just came off earnings. PFGC. I want it to work under 40 or 54.5, but there's no real setup. There's no real setup yet.
Let's get him there. I like this one. In time, a couple weeks, with the moving averages catch up. Looks pretty good.
Yep, and that's all I have on my list.
Cool. Then Ricky mentioned PCAR 9550.
Yeah, definitely see what he's looking at, 9550 to 96 versus it's like this 92 for now. But same thing, like kind of like what Cush's first name that he mentioned, where like it, the name broke down, the name based out, 200 days now acting as support. Like these are all things that are definitely going to be in Ricky's favor. And it's just tightening up here. Earnings are out of the way. It's like everything you could kind of want separate for, obviously it's not like a blue sky breakup, but still it's like, I miss this. And this looks probably one of the best, that we've gone over so far. Definitely looks really good.
Yeah, and it's so much easier to see like how this is such an easier trade than trying to buy it, say like mid-September of last year when it's on that downtrend and you're trying to buy a little further. There you go. Yeah, like this area, right, where you think it's going to bounce, it kind of does, right? It goes from 78 to 83, 84, 85-ish. You're like, okay, it's coming back, but there's really still nothing there. So being able to just wait and really see that, I guess you can call it a momentum flag that's kind of been happening for the last 2 months. That's what you really want to look for before going in and trying to make a swing. This is a really awesome chart. I like this one a lot.
Yeah, it's really good.
You mentioned Costco earlier, Ben. I'm definitely looking at that one, but I want to wait until it gets back over the 50-day moving average. I know you don't have that on your chart, but the 50 days right around 526-ish. So I'm waiting for it to kind of consolidate a little bit more and see what happens with earnings too in 9 days.
Yeah, looks good. All right, see, Ricky was the only one in the chat. Anyone else have anything to look at today?
I'm personally just, not looking to swing much with everything going on and like the news and all this kind of stuff. I mentioned it last week. It's very similar to the whole China stuff from 2 years ago. And just, can't hold any risk overnight and all that kind of stuff. Yeah, Alex at AXP for 200. I think we missed the boat on that one. Financials were, I think 180 was probably the area to buy.
Yeah, this is definitely
Mickey Mouse.
Yeah, I mean, but he said, a couple more weeks sideways, ideally. So with them on that, this was one. If it went today, I don't think Alex would buy it, nor would we. But if this, like you said, it consolidates, probably gonna have to come back and almost maybe retest that 180. But
I was gonna say, yeah, I'd be more interested buying it off of that 190 recent support, or even the retest of 180, and having that lower risk opportunity versus trying to buy new all-time highs in this market. It's tough, especially after the stock just moved 25% since earnings, pretty much.
Yeah, definitely agree. But yeah, I mean, like you said, Heaven, before, definitely doing less is more right now is definitely the move. I know what some people can get frustrating, but that's more so. I think it comes from when you want the market to do something, like you want the market to go back, to or whatever it is, and it's not doing that, and then there could be that frustration there. But I think when you can let go of that and just let the market do its thing, and just be open-minded to, whatever is going to happen, it makes it a little bit less frustrating. I think just at least from my own experience, and when you just take also when it can be difficult, we tend to zoom in so much, and the market's been down 10% in the last month, but then we're quick to forget, that the market is up nearly 100% in the last 2 years. So you have to take those small short-term areas of pain with a grain of salt, because we have had an amazing market for the last 2 years. So definitely don't let the get beat up during these times. When it is difficult, this is definitely time to look back on the recent trades, do the journaling, look at the longer term stuff, see where the money is being allocated, and make bigger plans than just what am I going to do today and tomorrow, and look a little bit more further down the road. I do see.
Yeah, it's learning to adapt too. If you are going to trade this market, you have to know how to trade it. It's just a different animal than just swing trading and letting your winners run and all that kind of stuff, because it's just very volatile. So you either learn to adapt, play very small, or don't play at all and just watch, like I was doing last week. I learned a ton last week without losing any money, which is the best thing you can do when things aren't going your way. So learning to practice that is super important. Ricky, he's looking at Enlock, said he had big earnings, and now it's kind of fading that earnings move right back to previous resistance. So that's interesting.
This is what I was just given. This reminds me of what the hell was it? Was it Match? Was this on earnings? No, this was after earnings. Okay, never mind. I would just wait. We could see kind of this trend line, and with it coming in, this might just be a little bit too premature. I would let it kind of pull in more. Or a lot of times when we have those big earnings moves, and they more than likely fade the entire move when they already are started in this part. Or even we saw the example of Mitch was we had that that blue sky breakout, that big day, it fades it the entire move, and we saw like this little bounce here, and expecting that continuation, and then it really faded. And I'm not saying I'm expecting that to happen with Enlock, but it's like Enlock would be kind of like the right here at the moment, and it's probably going to fade the rest of that shorter term move before any bounce is going to happen. That you don't need to get into it on this doji at lows, because more likely it's probably going to come in and test this 200-day, and then again you have that much bigger range. If it's trading between say 26 and 31, it's a much bigger percentage range that you can get involved with than buying 28 and having to be perfect versus 27.50 and expecting to go back to 31, which is what you want to happen. But realistically, that might not be immediately in the cards, but in time, it probably could be.
Yep.
All right, guys. I think that's it. If you guys again want to do any trade reviews this week, any updates to your financial plans. I have a couple of them scheduled already, but always have time for anyone who wants to go through and do those. So if you guys need any help, let me know. And we'll talk to you guys in the chat.
See ya.